everyone and welcome to my channel. So today's video is going to be covering the Help to Buy equity loan and exactly how you can go about repaying the loan. So we're going to be going through the different methods you can go through to repay the loan, all of the charges and costs associated with doing this, and then also the process to do this too. This is such a highly requested video on my channel, so I thought I would cover it off for you guys today. If you're new around here then you won't know, but I did actually have the Help to Buy loan myself and I paid it off in a 2-year period. So I've done a video all about how I saved for that too, and how I budgeted and all the things that I did to achieve that, which I'll link down below for you. And I've also done loads of other financial videos about properties and just financial topics in general, so make sure to check out my playlists and have a look at that as well, and there may be something else that you might find helpful too. So with the Help to Buy equity loan, for most people you'll have a 20% loan against the property, which the government lent to you when you first purchase your property. The first 5 years of having this is completely interest free, and then when you go into your 6th year you start to pay interest on this loan. And this is basically the government's way of trying to give you a bit of an incentive to save so that you can repay the loan, to avoid having this loan hanging over you forever basically. The loan is in line with the property value, and this is something that not a lot of people seem to know when they sign up for the government loan. They believe that it's 20% of the property purchase price, but it's in fact 20% of the current value. So the property market of course constantly is going up and down, but over the long run typically properties go up in value. So if you sit on the government loan and don't repay it over say a 10-20 year period, you could owe the government a very substantial sum. So it is in your best interest to look to save and to try and repay the loan as quickly as you possibly can to reduce the amount that you owe the government back. There's a couple of different ways you can go about repaying the loan. So you can either use cash, so simply save up a capital sum to repay the loan. You can move house, so if you sell your property, the money you then get for your property can then go towards paying off the 20% loan, or you can look to remortgage. Remortgaging will depend upon your income, so if you have a higher level of income than you did when you first bought your property, you may have a little bit of extra room to borrow more money, and also as the years go by you're repaying your mortgage. So again, there may be a little bit of extra money there to play with to borrow extra money, but of course you'll need to speak to a mortgage advisor about that to see if you're in a position to remortgage, and that will effectively clear the government loan, and then you'll have a bigger mortgage on the property with the lender that you went with for the mortgage. So in terms of repaying the loan, this has to be done in a minimum of 10% chunks. Again, a common misconception is that you can pay this off monthly, that you may be able to set up a direct debit and pay it back each month. That is false. The minimum that you can pay back at any given time is 10%. So if you opted for the 20% government loan, you can only pay this back in either a full lump sum or 2 lump sums over time. So you do have to save a significant amount of money to be able to repay the loan, and you can't pay it off in little chunks here and there. And when you do repay the loan, it isn't as simple as just making a payment to them. There is a relatively long process that you have to go through to enable you to repay the loan, and there are fees associated with this as well. Because the loan is 20% of the current property value, the government will want you to obtain a valuation on the property to determine what you actually owe them back, because this is constantly fluctuating. So when you buy the property, you really have no idea what you're going to be paying back. In the short term, with new builds, typically, not always, so I have to caveat, typically you buy at a premium, therefore the first couple of years of having a new build you often don't have much equity in the property because they're sold at a premium. Therefore the first couple of years often you are in negative equity with a new build. But like I say, that's a caveat. It completely depends on the property market, so your property may have shot up in value and you may owe more, but you may owe a little bit less. It just depends on how the property market is. The first step is obtaining a valuation. Now this has to be a RICS regulated valuer to undertake the valuation on your property. So you can simply go to Google and type in RICS regulated surveyor, and there'll be a list of loads of surveyors in your area, and the best thing to do is just email a couple of them and find out the one that you find to be most cost competitive to appoint as the surveyor for your property. Surveys vary in cost, but they can be anywhere between around £200 up to the £700 mark. And effectively what the RICS regulated surveyor will do is they'll look at your property and they'll compare this to properties in the area, and they'll look at loads and loads of different factors. It's quite a niche market, which is why they need someone with a high qualification to do this, and they will then make a judgment based on all of these different factors, and they will value your property based based on that. They then produce a detailed report for you explaining exactly how they arrived at that figure too. So once you've had the property valued, this is then valid for 3 months in terms of the process that the government want you to go through. So if you don't complete the repayment within 3 months, you'll have to have another valuation done. So it's very important that once you start the process, you move quickly, you stay organised, and you make sure that it's done quickly. Otherwise, you may be incurring a lot more fees along the line. If for whatever reason you face delays and it doesn't get completed in the 3 months, you can apply for an extension, but this may not get accepted, or you can obtain a desktop valuation from your surveyor, but this again could incur another fee. So it's all things to consider, and personally for me, it's just all the reason why you need to hurry up and get it done quickly. Another requirement, and something that you should do at outset before you even start the repayment process, is obtaining a solicitor. So you will need to have a solicitor that are acting on behalf of you to complete this process. It is one of the requirements, and they will also have a fee in doing this. Their fees will vary, but it's around typically the £500 mark. So once you've found a solicitor and you have your RICS regulated survey completed, you will then need to go to Target. So Target are effectively the administration team, if you like, that deal with the repayment of the government loan on behalf of the government. So what you need to do is you need to phone Target up and you need to explain to them that you want to repay the loan. They will then go through the application on the phone with you. It's quite straightforward. They'll have a couple of questions that they want you to answer, and they will then send you a form that you need to complete. They can digitally send you the form and you can complete it, and you can digitally return it to them just by scanning it and returning it to them. And then there's also a fee that goes along with this, so you have to pay £200 up front along with the application to start the process. And along with the application, you also need to send the RICS regulated survey too. So Target have their own turnaround times to complete everything, and these will completely vary depending on when you're making the application and how busy they are internally. So when you phone them up to start the application, it's definitely worth asking them to run through with you how long they expect this to take, and for them to go through each step with you so you can have an idea as to what the steps are, so you can kind of create your own little checklist if you like and just keep monitoring it. That's exactly what I did. I made sure that I monitored it. I made sure that once I'd sent the application to Target, I phoned them quite regularly until they had reviewed it. And I also chased up the valuation with Target because they'll need to review the valuation to make sure that they are also in agreement with it as well. So typically their turnaround times can be a few months, although the process that I went through from start to finish, from submitting my initial application with Target to completion, was approximately 6 weeks. But like I say, every single circumstance is different. Your case may be different to mine, so it is really key and important that you stay on top of it and you make sure that you chase everyone, your solicitor, Target, just to make sure that it all goes through smoothly. On the application as well, you will need to detail your solicitor, and that is why it's so important to find a solicitor at outset and appoint them, because solicitors will have their own turnaround times, they'll have their own workload as well. So for me personally, I got in contact with the solicitor months and months way before I was even going to start the process, because I wanted to have a solicitor ready who knew that the work was coming their way so that they could have the time to do it. Because if you appoint a solicitor, they might have a workload of a couple of weeks and then they may not be able to start your case for a few weeks. So it's really important that you do your research up front, that you appoint your legal contacts up front, and it will just make the whole process go so much smoother. So once Target have reviewed your application and the valuation, they will then submit the legal redemption paperwork to your solicitor, and at this point your solicitor will work with Target and they'll complete everything that they need to. So at this point it's kind of away from you now, and your solicitor is dealing with it for you, so you can just chase your solicitor, you know, on a weekly basis just to see how they're getting on with it. So when it gets close to the end of the process, your solicitor will have an authority to complete, and this takes 1 week to complete. So at this point you will then need to send the funds to your solicitor so that they have the money ready to pay off the government loan. And then at this point your solicitor will handle the redemption of the charges, i.e. the Help to Buy equity loan, with Target directly. So on completion day, effectively what happens is the solicitor will send the funds to Target, and then this clears the Homes and Communities Agency second charge on the property. Once this is all done, it can still take a couple of weeks to complete, because they will then need to submit paperwork to the land registry, and then that removes all the charges on the property and finalises the entire transaction. And then at this point your solicitors will be provided with confirmation that this is all completed and the second charge is officially removed, and then your solicitor issues you a title information document, and that will just detail all the changes and that the loan is removed and that it's in your name now and that the second charge has been removed on the property. So that is effectively how you repay the loan, the way that you go about in doing it, and all of the fees associated with it. As you can see, it's quite a drawn out process. There's a lot of steps involved, so if you can repay the loan in a 20% lump, this is probably the most beneficial way of doing it, because it's going to avoid charges for you, and it's going to avoid all the process, the waiting around, and yeah, mainly the charges that are associated with it. However, having said that, if you are saving up the 20%, obviously this can take a while, so if you have saved 10%, it may be worth thinking about the property market, and is the property market booming and doing really well at the minute, which means you're going to owe more money back, or is the property market at a low point? So consider that as well, because the longer you sit on your savings, you may find that you owe the government more back at the end, depending on how the property market is. It's so difficult with a situation like this, because you're never going to know what the right option is until kind of time has passed and it's happened and you can reflect back on it. But it's just something to be mindful of, and just to consider what the best method is for you at the time, how quickly you're going to save that money up, and if it's worth paying it back in 10% chunks or the full 20%, because the fees associated with repaying it back are approximately around 1,200, 1,500 on average combined fees. So it's worth thinking about, should I pay it back in two 10% chunks, or should I pay it back in a 20% chunk, depending on how long it's going to take you to save. But anyway guys, that is everything on this video. I really hope you found it helpful. I'll link my Help to Buy Equity Loan pros and cons video down below, as well as how I saved to repay my government loan too, and I really hope you enjoy them videos. I've also done one on the Help to Buy shared ownership pros and cons as well, if that's something of interest to you as well. Thank you so much for watching. If you found this helpful, please give the video a big thumbs up, and also subscribe to my channel for more videos like this in the future. I'm not a solicitor or qualified in that area or anything like that, but this is just my personal experience, what I went through, the exact steps that I went through, what my solicitor did for me, and I thought I would share my information with you too. Thank you guys for watching, and I'll see you soon. Bye!